All right, it is Friday, December 10th, and actually the market is not even closed yet. It's just before 3 p.m. Eastern, and we have been in grind-up mode. Just covered one short trade and thought I would use this time productively. By the way, the short sequence, I've talked about this several times in the blog lately, is the sequence where you let the market take out the prior swing high, let it get that exhaustion push behind it, get all the early shorts or longs flushed out, in this case shorts, let it trigger, which is triggering the majority of the newbie trader stops, and then once it triggers, then you get right in, and it wasn't a major move, it's about a point, but I'll take it in this market. Anyway, I thought I would talk about a couple of books, one of which you're probably very familiar with, but you may not be familiar with, as Paul Harvey would say, the rest of the story, which is nowhere to be found in the book. And I thought I would do so because it's interesting in that those of us that provide education in this business, I think, have an obligation to the public. I think I have an obligation and a responsibility to the public as the eyeballs continue to grow and as the mail continues to increase. And I get mail along the lines of some of which I spoke of in recent weeks in terms of people struggling. And one of the challenges I have when I went public with this blog, even though I've been teaching and been in the public eye for a good part of the last decade, I started the blog during a time when my trading obviously was lights out, and the last few years have been very good. And one of the challenges I have in that, though, is and one of the reasons that I want to harp on the reality of the slumps and the challenges and that kind of thing is everybody needs to understand what the complete story is, and that's how I've tried to balance the timing of which I launched this in 2008. And one of the ways I think I can do that as well is talk about a couple of books. You're probably very familiar with this book. If you're not, it is a classic, Reminiscences of a Stock Operator. And it is widely regarded as one of the best financial books ever written. And the general take is that it was written about Jesse Livermore. And again, just a really outstanding book in terms of what to do, what not to do. A lot of reality, talks about his wins, his losses, and all that sort of thing. He made a lot of money at various points in the history of the market. But as Paul Harvey might say, what you may not know is the rest of the story. This is, again, a classic book, classic strategies, timeless strategies that have been in print for a long, long time. And he went broke. And, of course, the book doesn't talk about it because it happened after the publishing. And it's interesting, even if you read the foreword in the back of the book, at least to my knowledge, I can't find anything about it. But if you just do a quick search for Jesse Livermore and, for example, go to the Wikipedia site, you will find a very interesting excerpt on exactly what happened. And not only did he go broke, but he, as many other people in this industry have done, unfortunately, it got so bad that he was desperate enough where he felt he had to take his life, and he committed suicide. And when you think about that, I mean, how can someone who basically understands this business and whose mindset is forever in print in this book, how can that happen? And I think that's a lesson for every one of us. I've mentioned in the last couple of years the example of Archie Cares, who won millions playing cards and lost it all. Jesse Livermore, who made multiple profitable killings in the market when he was on the right side of the market, and was one of the richest men on the planet, lost it all. I have known individuals in this business who have again, felt desperate enough to take their own lives. I have certainly seen people struggling, and again, I'm not trying to be a downer here at all, but I want to make sure that everybody understands that we must continually be diligent and continually be on our game to put ourselves in a position where we don't go there. And one of the best ways I know, and I've learned not to go there over time, and I've referenced this recently in terms of starting to enjoy slight drawdowns, enjoy what I would call plateaus, where you're kind of spinning your wheels for a period of time while you're looking to get your game together. And I've been through that a little bit in late '09 and parts of 2010. I think that is one of the most important skills. I think it is one of the skills that certainly has taken me the longest to think that I've somewhat developed it, and certainly it'll never be probably ever fully developed. But, you know, again, I try to, whatever we do here with a formal education, whatever I do in terms of sharing my own results, I want to make sure that people understand the full spectrum of what this business is about and how it tests us every day. And when I say us, I certainly include myself. I've been very public in terms of periods of challenge, periods of burnout, periods of just not being focused, not being zoned in, along with the times where I am. And like has been said in the Stock Operator book and elsewhere, this business is all about maximizing your gains when you're on your game, maximizing your gains when you're on your game, and minimizing your losses when you're not. Whether the market is not conducive to what you're doing, or whether you're just out of sorts, or what have you. And that's why the concept of outliers that I push in the course and I push in this blog is so very important. Whether it's that one trade a day, or one day a week, or 2 or 3 months over the course of the year, or 1 or 2 years over the course of your career, that is what trading is about. It's about pushing hard when those conditions are ripe, whether it's on a short-term basis or on a longer-term basis, and you know, putting yourself in a intellectual position, a psychological position where, you know, you don't let what happened to these guys. Just an incredible story. I'll put the link in the text portion of this blog, and you can reference that a little bit. The other book I thought you might be interested in, and I haven't really talked about this, I don't think, at all, is a book called Mind Gym. And I can't remember, I apologize, who first clued me in on this. It might have been Linda, it might have been Brett, I don't know. But a great book. It's written in real easy fashion, a real easy read. You can pick it up and read a chapter in just a few minutes, if you will. And there's a chapter in here called Fate Loves the Fearless, which it's just a few pages here, but I'm going to quote a couple of excerpts here. So there's a saying in baseball that you can't steal second with your feet on first. It talks about Ricky Henderson. It goes on to talk about fear of failure. Fear of failure can restrict a player. It can kill an individual. If one continually worries about failing, he'll get so tight that he will fail. And you know, a lot of this seems to make perfect sense, but it's written in a way where I think it is really easily understood, and talks about here the perfect pitch syndrome. And an example of this condition is a successful AAA pitcher who's called up to the major leagues. Instead of trusting his stuff, the pitcher thinks he has to be perfect against big league hitting. So he tries to nibble on the corners of the plate. Because he was new to the big show, the umpires don't give him the close pitches. The harder the pitcher tries to paint the corners, the farther behind in the count he falls. The more he gets behind in the count, the greater the hitter's advantage becomes. And just goes on and on and on. Toward the end of the chapter, Michael Jordan calls fear an illusion. He and many other great athletes learn to turn fear into anger. You can run from fear, or you can get angry and attack it. If you challenged Jordan's pride, and I'd say the same thing of Bird, he wouldn't be afraid. He used the energy to become more aggressive. Good athletes take fear of failure and turn it around. And Jimmy Johnson's quoted here as well. saying it really comes down to your philosophy. Do you want to play it safe and be good, or do you want to take a chance and be great? This business is all about risk. It's all about managed risk, but it's all about risk. Those of us that left other stable careers to pursue this really understand that well. Anybody who's ever made a trade hopefully understands that really well. And that area of risk will always remain. The Tao Poker book talks about, wouldn't it be great just to freeze us when we're in the zone, freeze ourselves, freeze time in terms of never having to go back into a situation where you have to risk that capital that you've grown. But the fact is, if you want to continue to grow it, you always have to go back into that world of risk. And another reason that we always have to be diligent in not letting this happen. Again, the rest of the story, this is where we don't want to end up, and hopefully, tools like this can help us stay on the right path. Again, the book is called Mind Gym, GYM, An Athlete's Guide to Inner Excellence. It's written by Gary Mack with David Cass Stevens, and let's see, written in 2001. McGraw-Hill is the publisher. So anyway, I thought I would use this time where the market's just showing us some flotsam and jetsam here on a Friday afternoon. Just remember what this business is all about. Yes, I've been very successful in this business. Yes, I've also had my challenges, and it's about maximizing it when it's there, minimizing it when it's not. We all face struggles, even the best of the best. So thoughts to chew on for the weekend. Try to do another post in a couple of days. Have a great weekend. Get some rest. See you back here on Monday, if not over the weekend. Take care.